You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market, from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike Tussaw from RCM Asset Management, Andrew the Rock Lobster Giovinazzi from OptionPit.com, and Mark the Greasy Meatball Sebastian from OptionPit.com. And now, get ready to hit the option block.
All right, everybody. That rockin' tune means it's time once again for a little show we like to call around these here parts, the option block. A little bit of options analysis, a lot of unusual activity, some of your questions, some of Uncle Mike's strategery, a whole bunch of other fun stuff. We stir it all together into this boiling oil, and then we dump it on you as the besiegers of our castle. I'm just kidding. That metaphor went down a dark path. This is, of course, the program where you guys get hopefully your favorite bi-weekly source for all things options related, a little bit of options wit, a little bit of wisdom, and all the other fun stuff that we do. You can find it, of course, theoptionsinsider.com, as well as wherever you find your favorite podcast programs, iTunes, TuneIn, Stitcher. If you're just subscribing to our main feed, our regular option block feed, that's fine. You can go with that if you just want this show. Or if you want the full enchilada, all 15 programs, then grab the network feed, and that will suit you up proper for the week, the month, whatever you need to fill with some options-oriented time. We got you covered. And, of course, you can always grab our mobile app available for iOS, Android, and the beloved Fire OS. And however you get us, including those of you who can join us live every Monday and Thursday, live via Mixlr, MIXLR. You can always grab the link if you follow us via social media. Just bookmark it whenever you come in there, and you'll be able to use it every time. And you can, of course, listen to the show live, ask questions, all that good stuff. And joining me on the old program today, starting off, Andrew's already taking umbrage at my oil metaphor. He didn't like that. Mr. Rock Lobster, Andrew Giovinazzi from OptionPit.com. Sir, so you're not a fan of breaking sieges with boiling oil, I take it?
Well, as long as I'm not storming the ramparts, I guess. You know, and considering you don't have any snow in Chicago, I feel your metaphor should have been a little cheerier in this season, in this second week of Advent. I'm just,
What can I say? I have sieging castles on the brain. Don't we all? This time of year.
Too much Game of Thrones or something.
Yeah, there we go. Too much Game of Thrones, too much Vikings. I'm not sure what caused it, but whatever it is, it's a good place. I'm going to be there for a little while during the show. So I'll have that running through my mind as we do the show here, as we also turn our attention to that lovely paradise on earth, St. Charles, Illinois, where I would never even deign to ask him if they had snow because, of course, it's always a seasonal and tropical and temperate 73 degrees and sunny out there. Uncle Mike, how are things going? And did you guys finally turn off the old weather shield in St. Charles this weekend?
Well, yeah, we did. It's the Christmas season. Why wouldn't we want snow? I mean, we got to have that for the kids around here.
Well, there you go. So it can't be paradise on earth all the time, unless, of course, it is this time of year, and you live in Maine, one of the other colder climes, in which case you like yourself some snow. Otherwise, St. Charles, move there. It's good. 73 degrees and sunny all year round, except for December, the holiday month, as Uncle Mike said. They have good windows there in St. Charles, Illinois. Go check them out if you are indeed so inclined. Meanwhile, let's keep on rolling with the show before these metaphors get even more tortured and keep on rolling right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody, welcome to the Trading Block. As the name implies, this is indeed the portion of the program where we break down what was moving, what was shaking, what was catching our eye in today's broad activity. And it was a net green day on the old street, with most of the major indices closing up. S&P up a little bit more than 0.5%, about 0.6% or so. The Dow, ever the laggard, only up about a little less than 1/4 percentage point on the day. And the Qs, as they have been wont to do of late, leading the charge to the upside and to the downside today, leading the charge to the upside, up about nearly a full percentage point. And the VIX cash off about, aggressively off about nearly 2 handles, about 1 3/4 handles, right around down in the 12 handle again. When we were prognosticating on vol views, I was leaning towards the south side a bit, and it seems like, at least in the early blushes, that is leading the charge. Of course, we all know how that goes. It could change intraday on Friday, so I hold out no hope. Again, right about 12:35 or 12:36 right now on the day. So a lot of stuff to parse here on the show. But first off, let's kick it off. Let's start in order of reverse proximity. Let's go out to the Christmas paradise on Earth known as St. Charles, Illinois, where Uncle Mike joins us. Uncle Mike, what caught your eye in the middle of turning off the weather shield and setting up the windows for the great holiday festival that is St. Charles?
Got it. A couple. Oil and money. That seems to be the thing that's moving the markets today. I mean, I know industrials have their recently have some say as well, but XLF was a big mover today, up 27 cents. So I think that's one where I really believe, and I've talked about this over the last couple of weeks, I really like XLF just for the perception factor of it. Still like XLE, but and it's actually even surprising me somewhat. I figured we'd have a little bit more of a pullback on it, but it just continues to run. But with that, I would still tread cautiously with XLE because of the fact that just even recently over the last couple of weeks, it has had quite the run. A lot of this is also based on what happened with the big meeting on the 30th. So that was definitely another thing that caught the eye of Uncle Mike today. Another thing that caught my eye that isn't really eye-catching per se, but just as long as I get asked about all the time on the show, is my beloved fruit company, Apple. Apple is still one, it's kind of following the technology trend right now to where money is going out of technology and into financials. And Apple also had another down day today. So with that, with Apple having its down day today, I think that it's still up over 10% on the year, so it's still having, from year to date that is, because I believe we opened up the year with Apple at roughly, or we closed last year around, well, it's up about 5% since the end of last year. So it's still up on the year. I still think it's a good company. It's a good stock to have. It's still not the stealth thing that it once was. I would love to see it go down to 80 for me so I can start doing all my Apple collars and that type of thing that I talked about on the show. And good point, Andrew just IM'd us saying plus the dividends that exist on Apple. So there is, in addition to the 5% that it's up price-wise, it does have the dividend factor. So all in all, I would say that the big story of everything with which I'm looking at, and then that of which I see, would be oil and money. One other thing on that would be, I know we talked about it a little bit on the show on Thursday, natural gas hit a 1-year high, and it looks like it hit another 1-year high today. So keep an eye on that. I think that also could play into the mix of XLE increasing. And if we have a cold winter, there's no reason to believe that this rally is stopping. So I'm not an investor in natural gas directly per se, but this is something to definitely keep an eye on as I talk about XLE all the time.
Yeah, nat gas has been popping of late. In fact, it even made it onto our TWIFO rotation once or twice, I believe, in recent weeks. It's not usually the sexiest of stories. You got, somewhere between around a $3 or so price point. So it's not a natural for options. And, of course, you have a lot of weird strikes in there and other things. And people are mostly focused on the energy side, of course, on big crude. But nat gas is the other side of that coin. If you're interested in one, you're certainly interested in the other, and that one has been popping quite a bit of late. In fact, I wouldn't be surprised to see it make it back onto the TWIFO rotation, perhaps this week as well. Let's turn our attention, speaking of rotation, let's see what's been rotating through the screens over there in the land of the pits, Mr. Rock Lobster. What have you been watching, and what have the pit chatters been turning it up on, at least so far today?
Well, I think what Mike was saying, money, I think he probably means financials and banks. Not long ago, weren't we talking about Deutsche Bank crashing, going to zero.
Yeah, going the way of the dodo.
No, apparently not. Goldman up 20% since the election. Not bad. JPM not far behind. Bank of America was a $13 stock this summer, and it's trading 21. So who says you can't make money owning the financials? It's hard to see because they were basically trading at no multiple this summer as far as to earnings. And, it just goes to show you the market can change. Maybe smarter regulation, who knows, or less of it, because the banks have been pretty much being taxed at a pretty substantial amount every year on all the regulations. So banks look okay. Oil, I don't know what really changed oil. I guess OPEC is going to be more serious about production. Gas climbing up is another thing. All those things are good. Right now, I also look at like the base commodity, steel, copper, all that kind of stuff is coming out of the basement. So those are, I'm looking for stocks that are not at all-time highs, that are far away from all-time highs, that are closer to all-time lows, and, basically trying to buy that stuff. I think technology has pulled back. It's probably a bit of a buy, like QQQ. I liked it this year. It was outperforming the S&P 500 pretty easily, and it's pulled back a little bit since the election. But I'm still adding to a little bit of that. So, the technology stocks, until the valuations get kind of goofy, I still add to it a little bit. Mostly just Google on pullbacks. But for everything else, and we're also noting we are 19 cents away from the 11 handle in VIX. Italian referendum, who cares? You want to change the Constitution? Forget about it. Prime Minister, kick him out. Nobody cares. So I think that trend and the euro just kind of popping on that. Maybe a lot of short covering or something, but those are kind of the issues, the things that we have been looking at. Also, another one is just bonds have failed to catch a bid, really. So you look at that stuff and you go, oh, wow, it might be just a stock market again and less so about what the Fed is going to do. And they just go back to, okay, well, we're going to start raising rates to get back to normal rates again because we want this experiment to end. And I think they're going to lean on the government to try to help stimulate the economy with kind of the old-fashioned way instead of this newfangled monetary way that we tried for the next 6 years, which and granted, we're not in a financial crisis anymore, and unemployment's better. Everybody argues about all the statistics, but it's just, I think this recovery, I think the government spent an awful lot between what the Fed bought and the addition to the deficit for the amount of growth we have gotten relative to what we have done in the past. So, it was a way to do it, and maybe we're going to try something else, which at this point, I'd be a little more in favor of. So,
Italy and the VIX. So what is this, V stocks? What are you talking about, sir? There's no Italy factored into the VIX. I can't even see why you would even make such a bold and outlandish claim, sir. It's madness, I say.
It's all I know, huh? They just totally ignored it. They're like, whatever. We didn't care. So, and this time I think the market got smart, and they're like, we're expecting the Italians to do us this, and they're going the way of the populace, I think, at this point. And ultimately, that's probably better for, I guess it's better for the Eurozone, at least off all the short covering in the Euro had anything to say about it. So that's what we have. And 12 VIX is still 12 VIX. That is, to me, that's like zone 1. That's the bottom of the range. It's in the middle of the bottom of the range. And there was no bid for that thing in sight today. So if you were short some vol, it was a good day to take some off. But it looks like, we were in the big thing is we definitely, and today we were laughing. Okay, well, we'd see the 11 handle before Christmas. And right now I'm looking at it, I go, we could see the 10 handle before Christmas, which would be, which for the vol products and things like that, that could be a level of yuckville for those that they haven't seen in a while. So depending on which vol product you like or trade, you know, you could be catching a nasty falling knife if you're trying to pick pick a spot involved for it to bounce. So I would just say look out below if that's continues. So the way we're structured, we're kind of expecting vol to kind of keep trending down a little bit.
Does seem like it has that air about it since we're talking vol and VIX. Was a good month to be in the VIX business last month. Of course, CBOE reporting their November numbers. And VIX, surprise, surprise, lighting it up. Also, surprise, surprise, lighting it up in the non-U.S. hours. We all know there was a lot of activity there on a certain day in November when the markets were going mad and the futures were going mad and everyone was losing their mind. And they set some interesting records. They set a record for their non-U.S. trading hours. Total combined volume for options and futures. Of course, they have the CFE over there as well. Nearly 300,000 contracts. That's actually more than double their previous record of 144,000 contracts, which was set back in December of last year. This is in the non-U.S. hours, not the U.S. hours now. Listeners, they also had a VIX options hitting a overnight out record of 89,000 contracts. Pretty good paper for the overnight session. I'm sorry, and SPX options and VIX futures in the extended time also having looks like about 41,000 and 41,000 and 263,000 contracts respectively. Remember, they have a little bit of a different schedule over there, and they added a lot of those non-U.S. hours to cater to events. There's a lot of players overseas that want to play in the products like vol and others. And traditionally, they haven't had a lot of choices, so these expanded hours, you have things going on in the Eurozone like Italy, you have things going on overseas in Asia, or in our own crazy markets like the elections. Those extended hours do tend to help. Before we roll out of the old trading block, let's bring up one. I know there's one name you guys like a lot over there in the land of the pit. A lot of our listeners like as well, because earnings season is mostly winding down, kind of quiet on the earnings front these days. But there are a few names still on the horizon that are of interest, including they of Invisible Yoga Pants infamy, a.k.a. Lulu, closing today, $57.12. Good day for them. Up about nearly $2 or 3.3% on the day. And so this is the name that traditionally has gotten a lot of retail trading attention. They are coming out on Wednesday, I believe, after the bell, if not before. Like I said, they're pricing in right now about nearly $5, about $5.35 or so. So right about a little more than 9% out there. I know it's still a little early, but we're not going to get to it because we're not going to have a show on Wednesday. We have a show on Thursday, obviously. So, Mr. Rock Lobster, anyone over there in the pit chat, are they watching Lulu? This one usually has been a one of interest. I know they like to watch it because of the invisible lady pants, but aside from that, any of your pit chatters into this one yet, or are they still waiting for Wednesday?
So is it watching Lululemon per se, or watching the invisible pants?
Whichever floats their boat. Yeah, I know you got some weirdos in there, so maybe both.
What's funny is it used to be kind of a fun stock, and nobody has mentioned it in quite a while, to be honest. I wish I could add some color to that, but I guess the short thing is there's just nothing to see in Lululemon anymore.
How long you been saving that, sir?
Where's the sound effect for that?
Yeah, we need. Yeah, that is.
And I said that with a straight face.
Totally did, which on audio makes it so much easier. But it is interesting that even your diehards out there. Yeah, you're right. It has kind of lost some of its luster. I even kind of forgot it was coming up until I kind of checked out before the show. I said, oh yeah, Lulu's still on the horizon. I used to watch it a lot too. So you're right. It has lost some of its luster. I guess once you're in the rearview mirror of those high flying invisible pants days. It's kind of hard to recapture that magic. That said, we'll do our best, though, listeners, as we keep on rolling right on into the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, that funky tune means it's time for the funky portion of the show. It's time for the Odd Block, the portion where we put on our fedoras and our trench coats, maybe grab a Saturday night special, no boiling oil needed here, and head on down the dark alleys of the options market. Let's pick things up. A lot of commodities have been catching our eye, mostly crude, but we do get into the miners and all things precious of late, and we're kicking things off in that arena yet again, this time with Barrick Gold Corp, ticker symbol ABX. Pretty much closing unched on the day, only about a nickel or so closing at 1571. This is a name that does about 44,000 contracts a day, so fairly active certainly for our odd block candidates. So that's about 1,000 or 10,000 more than a lot of the names we profile. 10,000x, I should say. A lot of the names we profile sometimes here on this show. They don't do a lot of paper. But today, doing even more than that, 137,000 contracts. About almost 4 over 1 calls over puts. And you might think, well, they're going to look at some calls today. And you probably would be right in most scenarios, except here, where that figure would lead you wildly astray. And instead, we're looking today at Jan puts, of all things, to the tune of the Jan 2017, so right up here, Jan, 14 puts going up. Looks like paper gobbling up a nice chunk of 7,516 to kick off the day here for 43 cents as the day went on. A little about 2,500 or so more piling in, a total of a little over 10,000 going up on the day. These puts went out 40 at 42, so the latter one's probably in that same price range. The stock did close pretty much unch after all. And total open interest on this strike is about 26,000. So there is a potential for these bad boys to be closing. Didn't see any stock going up with these, but there was in the past, in fact, looks like there was today, some size closing on the call side as well, which is why we saw a lot of call OI, call trading going up today, call volume. The 22s, 24s, and 25s on the call side today did 33,000, 34,000, and 15,000 contracts respectively. So it looks like perhaps maybe one of our friends was legging into a vertical or a funky tree and was maybe financing that with some puts, and maybe today he decided the whole thing not worth his time, or maybe it paid off the way he wanted. He put these up way back in August, actually. So he's been sitting on these bad boys for some time. So I guess he's decided, perhaps, Mr. Rock Lobster, that it's time for these trades to go home, to the old trades home, where they can go and relax. They've been sitting around for a while. This name has been vacillating around for a little bit. Let's look back a little bit past August. Back in August, this thing was trading in the low 20s. Got actually up as high as about 22.5 or so. Right around that time frame, has kind of been vacillating its way downward ever since to the 15 handle where it is today. So been a bit of an interesting range. Perhaps the puts were the more interesting of that portion of the equation over that time. Mr. Rocklauser, what's your take here? You think this is, it is a bit of a quinky dink that there's so much volume going up on these strikes that have the most OI. So that's usually a good tell. But what's your take here on our friend seemingly closing all the options in ABX today?
You know what? I think it is a little quinkadental, don't you think?
We don't call it the quinky-dink block after all.
We don't call it the quinky-dink block. However, the Fed's coming out on the 14th. A lot of this stuff has gotten squished down. Those puts, I was looking around when they put it on. It looked like August timeframe when I saw a bunch of that volume went up. The ABX was more in the $18, $19 range, so a lot of this stuff was more in play at the time, kind of juicy, and they sold it. Note to self, you want to sell volatility, you don't necessarily have to sell it near term. If you sell it far enough away in time, it's less gamma sensitive that way, and I think it worked for this guy. So I think this is feeling like, as Eddie Murphy so famously put it, the guy wants to close his trade, take the money, and go buy the G.I. Joe with the Kung Fu grip. And that is what this trade looks like to me.
Can you still buy a G.I. Joe, the Kung Fu grip? Is that still an accessory or still an item you can get? That'd be cool. I want one of those.
eBay. On eBay.
On eBay, yes, the home of all things quality 80s action figures. I need a few more to festoon the studio here. I've got some He-Man, got some Transformers, got some other things, but no G.I. Joe with the Kung Fu grip here. So that might be a cool little addendum to add. Put that on the Christmas list for me there, Mr. Rock Lobster. If you would be so kind, as we keep on.
You never know what you could get.
You never know. Kung Fu grip, always useful. Let's keep on rolling into, I think we have a title for our episode. All right, let's move on to a frequent offender here on the old odd block, and just offensive in general sometimes. This is, of course, good old RSX. This is the Market Vectors Russia ETF. And this is the name that, closed today, of course, up about 30 cents or so, about 1.5% on the day. It's not a bad day here for good old RSX. It's a name that does decent paper, about 9,000 contracts a day, doing about nearly 45,000 today. So a pretty good pop here for RSX. About 8-to-1 calls over puts. And if that gives you an inkling of what we're looking at this time, you would be correct. And it wasn't Jan, it wasn't Dece. It was all the way out to Feb. What caught our eye out here in good old RSX, in particular, the Feb 20s, lighting it up to start the day with a mega block of nearly 20,000 going up on the Amex. Looks like paper buying for 86 cents. As the day went on, about another 10,000 piling in to the tune of just a hair under 30,000 total going up on this strike with the latter kind going up for various prices. These calls went up 75 cents at 81. So a little bit lower, probably maybe for some of those latter kinds. Didn't see any stock going up with these at all, so it doesn't look like this one up tied by any means. It looks like, and there's no open interest as well, only about 1,600 contracts open on this strike, so it does give the inclination that it is what it appears to be on the surface. Someone saying, you know what, I'm liking this party out here in RSX, and I think it's going to continue, and it's going to continue big, at least for the next few months. And putting my money where the mouth is to the tune of the 20 strike. So I got to pop up to right around 21 or very close to it in order for these bad boys to really start making any decent money. Looking back at the year that was here, the RSX has kind of paralleled a lot of the other names we've talked about here in the market as a whole, where it kind of hit its nadir back in that Jan-Feb period, and then it kind of just had a slow, inexorable move to the upside throughout the rest of the year with a bit of a spike here over the last couple of weeks here, starting in, of course, right around election time and kind of moving north since then. So it's been on an upward tier of late, and our friend here saying, you know what, I don't think 21 or that ballpark is really outside of the realm of possibility, and I'm willing to put my money where my mouth is to the tune of 30,000 contracts or thereabouts. Not a bad chunk of change. Mr. Rock Lobster, someone clearly wanting the Russian party to continue. Maybe he's just a big vodka devotee. What do you think?
I think the vodka is of certain. I think when you buy RSX, you actually get a bottle of Stoli with every 100 shares you buy.
That might actually move some volume. I think they did that.
It's a nice little dividend actually. It's quite nice. And if you live in Maine, it actually comes in already in a little ice bucket. You know, they just freeze it into a nice little ice bucket for you. So you're all ready to go, and just grab some caviar and have a good old time. Maybe in a little banyan. Isn't that the Russian thing where you go into the ice water and then the
is that the baths? Is that what they call it? The baths?
Yeah, I think banya is the. I'm pretty sure it is, but then they whip you with hickory sticks or something like that after you.
I know baño is something very different in Spanish, so if you go asking for that,
I think it's
you may be disappointed or quite off-put.
I think I'm gonna have to Google it when a second. I think this is, somebody's taking a playbook out of Mr. Two Sauce XLE call. I think the RSX is basically just a massive oil play anyway. And they have tons of natural gas in the country, and I know there's some of those names are in that ETF. And we were laughing; it was $12. I mean, they were valuing it at nothing basically in January, but that's where it was. Quickly traded to 15, and it spent the rest of the year trying to gain this $5. It's been kind of it's been a good put right if that's the kind of stuff. I think some of these country sector ETFs, once they when they all totally fall apart, I think Turkey's another one I think that's starting to look a little interesting to me, where they just get so cheap because everybody bails on them, and you start writing just junk out of the money puts, and you get, I think EWZ was another one last year when they got downgraded. So it just looks like RSX is kind of back with oil trading at a decent price. Maybe, some multiple comes back. If you look at a lot of the valuations in some of this stuff, especially connected to commodities, oil, things like that, they're not trading at, even with the rallies they've had because they were so sold off, they're not trading at crazy multiples of anything. So I think there's opportunity there. This guy, I think, just wanted to get long. I don't know if it was Tusa, trading RSX by proxy. Maybe he liked the Stoli deal. I don't know. But, he could have put up 15,000 calls, and now we'll just, see what happens. But it feels like the guy's going to be out of them in 2 weeks. We're going to see the guy selling them for 50 or 80 cents higher or something like that. Just,
hey, if I can't find my alcohol at the dollar store, then it's not worthy of my time. So I'm not a Stoli man.
One-stop shopping in St. Charles, the paradise on earth that is St. Charles, Illinois. Get all your clothes, your groceries for the week, and indeed all of your alcohol at the dollar store. 5 and below, forget about it. Too rich for their blood. Buck is where the action is. All right. Speaking of action let's wrap it up here with our last name here. Not a buck, trading a little bit more than that. $13 to be precise. This is good old Pandora Media. Ticker symbol P. This is the name that's had a bit of an interesting year of late. This one closed, like I said, $13.37 after having been on quite the roller coaster, hitting that trough down in like the 7 handle or so back in February, like a lot of names, and then rallying pretty hard, getting up to about the 15 range not that long ago, back in early October, and then kind of just taking it on the chin immediately after, even right immediately prior to earnings, and dropping back down 50% roughly, or about a third actually, down to about $10, and then slowly kind of, except for this last week when it popped up yet again. So this thing's been turbulent all over the place, so going from 15 down to 10, back up to 13, just in the span of the last few weeks. If you wanted some vol, certainly Pandora has been delivering in spades. Like I said, this is a name that does pretty decent paper, about 15,000 contracts a day. That's already on inflated numbers given recent activity. Today, doing 63,000, so a little bit more than that today. About 4.5 to 1 calls over puts. And what drew our eye, listeners, wasn't in the Dees weeklies or the Dees monthlies, or even out to Jan, or even Feb, for that matter. This friend here, he's outpacing all of our other candidates today in the odd block, going all the way out to March, listeners. And that's where he found what caught his eye. It was the March 15-18 call spread, but he didn't just do it straight up. No, that'd be boring. Who wants to come up and do one by one of the March 15-8? Why? We love it one by one. You got to love it then even more 1 by 2, and that's exactly what he did, to the tune of 12,000 by 24,000 of the March 15-18 verticals going up, doing it for net 52 cents on the day. It's like paper, buying the 15, so buying one, and then selling the 18, so doing that 2 times. A total of a little bit more going up on the 15s, about 13,000, nearly 14,000, and still about 24,000 and change. So maybe someone piling in after the fact, a little bit of looky-loos there on the 15 strike, or maybe he just had more to do either way. Pretty close to a 1-to-1 ratio. Also worth noting, someone blasted out or put up about 1,000 of the 15 puts on that March strike as well. So maybe all this activity out there in March bringing some other eyeballs to that March 15 strike. Interesting stuff. This one, obviously doing 1 by 2, obviously expecting a nice little run up, but not much beyond the 18 range. So this is indeed perhaps there has been some M&A rumors flirting around on this one, of course, hence driving some of that volatility we've seen of late. And our friend here clearly seems to be staking his flag on right around that 18 handle. Clearly, if it's much north of that, this trade starts to lose some luster, and if it's south of that, it does as well. So right around the 18 strike, even though if it came in at 17.5, I don't think he'd be too upset about it. But still, an interesting trade. He's given us up a little bit of time to do it as well. He's got all the way for March for this will they, won't they dance to play itself out. So interesting stuff, Mr. Rock Lobster. We've seen certainly worse if he went up and did this one. If he did it straight out, you got to buy those 15s for somewhere in that 85 to almost 90 cent camp. So he's saving himself, about 30 to 40 cents, depending on how you put this up, by doing this 1 by 2. So interesting stuff here. Of course, there's risk that this deal goes up and it's some crazy number that no one expected. But I think our friend here is okay with that risk because he's got some room to move on the upside even past that 18 strike as well. So interesting stuff. What say you here? Of course, that means that's a kiss of death for this strategy because all the ones we've mocked so roundly of late have knocked it out of the park, and all the ones we've kind of liked have kind of been meh. So maybe our friend here is doomed to the meh block. How do you deem this one, sir?
I know. I want to sell some 10 puts in Pandora right now. Because I know, I was thinking the same thing. I'm like, okay, like $0.50, whatever. I want to sell some 10 puts and 18 calls and watch the thing pin at 18 on a takeover. So it looks like I talked to a floor friend. He's like, yeah, there's just been a lot of Pandora paper lately. We highlighted some last week. A lot of call buying, a lot of out of the money short covering, calls short covering. Nobody wanted to have the sticky mess on their hands if the thing blew up. So it does feel like that kind of paper. And Pandora's on one of those stocks on my wife's list. She uses the company, like uses the internet product. And usually when she actually likes something, she usually likes the stock too. And she has a kind of a scary good track record. So it's on her list of things to buy, although she doesn't like it because it doesn't make money yet, but she really likes Pandora. So there you go. That is the Rock Lobster semi-seal of approval. But the 10 puts in March, I mean, you could sell them for 40 cents. I'd like to get a little bit more than that. You can sell the 11 puts in January for about 30, maybe a quarter. So you get a little bit of return on capital. Possibly you could stick that into buying some like cheapy 15 calls maybe, but I'm tempted. I am tempted on it because of all this takeover paper, but mostly with all this rumor stuff, it just kind of goes away and nothing really happens. So it feels like in a little thing too, it's kind of like Twitter where a lot of people use it, but if they go and try to put the company for sale, they don't quite get the money they want for it, which is kind of what I feel like with this one.
I was just going to say, let's look back in our magic crystal rearview mirror a few months and let's have the same conversation about Twitter and some of those puts that looked pretty attractive back then and actually came to be in the money not that long after, because they said, wait a minute, this thing doesn't actually make money. Pandora makes some money.
Exactly. Does Pandora actually make a little money? I'm just trying to look and see what
it's been a weird year for streaming. I think this was the first year that the record in the music industry actually made more revenue from streaming than from other outlets. Of course, that also reflects just how far traditional CD sales have fallen and that sort of stuff. So streaming is doing all right, and Pandora's the lion's share of that. But it's still it's still pennies. It's still micro pennies on the dollars of what it used to be.
Right. I'm wondering too, it gets so much more music out to more people so fast. But I would not surprise me if somebody took this over. However, barriers to entry, it feels like it's kind of getting that way in the streaming. If you don't kind of have your streaming flag in the sand at this point, Pandora has 100 million users or 200. It's a pretty large amount. So, those eyeballs at advertising, you think about it, a TV audience, people used to covet trying to get, 20 million people to watch a TV show, and you get, X number of people listening to Pandora. It's at some point, I figure they're going to be able to figure out how to monetize that. So anyway, but the paper anyway is all for the most part bullish, and I don't know if I could just quite buy the calls, but I don't think it's, I think $10 doesn't look like a terrible place, to own the internet property. But what the heck do I know? Although, like I said, my wife does like it. So
there you go. It passes.
She has a good one.
Passes the wife test. What more can you ask for a stock out there? All right, that's going to keep on doing it. But now, of course, it's Monday. It means it's time for you guys to take the reins with the mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, everybody. Welcome to the portion of the show where you guys get to take over and I just get to sit back and relax. No, you guys, all sorts of crazy questions, and we're here to answer them for you. Let's kick things. Of course, as the guy mentioned, you could hit us up Twitter, at Options on Twitter, or on StockTwits, we're The Options Insider on Facebook, or just hit us up via our mobile app or questions at theoptionsinsider.com, or if you're floating around the website, use the feedback form. That'll get to us as well. Last week, we asked you guys what was your commodities. We said we're capturing a lot of attention, generating a lot of vol. What was your commodity option of choice? And GLD/gold, the gold complex won that vote with 42%. USO/crude complex coming in number 2 with about a third. And then the treasuries and FX kind of tying for the bottom of the no one cares crowd, 11% for the Eurodollar TLT crowd, 10-year, 14%, actually more for the FX crowd, Euro USD and Pound USD. So surprising. FX trumping rates. We'll see if that holds up into the near future. This week's question, which just went live before the show, so it's brand new, brand spanking new. So if you don't like how the numbers are playing out, you can go influence them right now at Options on Twitter to make your voice heard. And today's question, keeping with that commodity theme, we said, hey, crude oil has been very volatile lately. So OIV, a.k.a. the VIX of WTI, a.k.a. the Oil VIX, right around 37 and a third, right as we started the show. We said, where will crude volatility, a.k.a. OIV, where will it close this Friday? And we gave you a few ranges to choose from. So pretty much unched around this range of the 37 to 38.5 range. We said between 38.5 and 40, or below 37. Again, this is Friday's close, or above the 40 handle. Mr. Rock Lobster, I know you watch an occasional OIV. You kind of familiar with the range it's been on. It's kind of vacillating around the low end of its range right now after spiking recently. First off, what are you feeling for the end of this week? And then what do you think our listeners are feeling?
I think volatility in oil actually is going to, with everything else, or most, because there's a lot of love, it will set should set a year low by the end of the week. That's my that would be my big guess. If I can guess that, I'm close to it. It actually is such a lame prognostication because we're only a couple points away, but I do feel like that is it is going to become one of those boring things that just moves around a little bit, probably becomes a good put right, and that's all she blows as far as USO and OVX goes.
So you're voting for below 37, if I can read into your answer there, and then you think our listeners are the same way as well?
The listeners seem to be a little more contrarian about that kind of stuff. As, okay, I'm going to buy the low vol because it's going to pop. I'm more of the camp of kind of all stays where it is until there's a reason to change it. With OPEC doing what they're doing, and the winter coming around, I think a little more bullish in oil, and they're going to crush the vol even more because that's what I think. But I think the listeners are going to. I think I like it to bounce a little bouncy.
And Uncle Mike, same question for you, sir.
Well, I am with Andrew in that camp. I think it's probably going to stay where it is until it does have a reason to go somewhere. So with that, I'm going to go with below 37. I'm going to say our audience feels the same way as well. I kind of think that we're probably going to level off in general on oil over the course of the next few weeks, and that's just in crude itself. But with the fire it's been on lately and with what it did today, I could be wrong, but I know I've been saying with XLE that I think it could be in for a little bit of a pullback, but for now I'm just going to say I'm going to go with below 37 on both accounts.
Interesting. Yeah, the vote just went live a little while ago, so the votes are just starting to come in now. But early voting, myself, I'm kind of, it's kind of at the low end of that range. If you listen to TWIFO listeners, the meat from a volatility premium aspect is still on the put wing. So in order for vol to really start popping again, it's got to move aggressively, or it's got to, of course, start trending down to the lower end of the strike range. That'll give it a little bit more juice. If it kind of vacillates around here, then we won't see a lot of pop here. But I'm still feeling. I don't think it's going to be elevated. I don't think it's going to sell off. I think it's going to kind of be around this range. So I'm kind of feeling the 37 to 38 half. I think it might rally a little bit in the near term as oil retreats a little bit, but I don't think it's going to be much north of the 38 half handle. So I'm going to vote for that one myself, even though I can't vote. It's my own poll, so I'm prohibited from voting. But if I were to vote, I probably would land somewhere around that range. But right now, what's winning with about half of the votes, again, early voting is above 40. So people are feeling the elevation. Then with second place, with about a third of the votes, is between 38.5 and 40. So people are feeling the upside, not the downside. Only 10% each for below 37, and for what I picked, 37 to 38.5. So interesting thoughts out there. Our listeners always are a little bit. You're right, a little bit contrarian. They kind of beat to the tune of their own mad drummer, which we like. All right, speaking of the mad drummers, see how many of you guys we can fit in here today. Let's go to Chad, a.k.a. Trader Chad, and he wants to know, are at-the-money straddles, are they really a good way of predicting a stock, or are they just more noise like whisper numbers? Good question, Chad. I think there's a couple of wrinkles to that question. First off, when you're comparing any real kind of tradable product versus some ephemeral nonsense like a whisper number, which is just analyst speak, then you kind of have to go with the tradable products. That's real money. It's every study you've ever seen, ever been commissioned that compares some sort of abstract, analytic versus real money as a predictor. It always tends to side with the real money because there's more skin in the game. There's more work being done for the real money stuff. So I always side with it from that side of the fence. And of course, I'm an options guy, so I lean towards the straddles as well. And we have seen that they're pretty decent, certainly better than any sort of whisper number. Remember, a straddle is not going to tell you direction. It's just telling you a range. So as long as you're okay with that, it's useful. Now, that said, the degree of efficacy is something that's kind of interesting. That's something we've talked about a bit on vol views, and I'm trying to push some of our guests there in the past because there is actually surprisingly all the research we've seen this year on people selling puts. I wish one or two of them would turn their attentions and their efforts towards analyzing something as basic as this, the performance of at-the-money straddles, let's say during earnings season. Give us a nice barometer. I mean, Goldman did one a few years back, and there's been a couple other small ones, but no one's really sat down and said, here, bam, here's the definitive study on straddles around earnings season, for example. I would love to really see that, to see the exact metrics. Because is it better? Yeah. How much better? That the numbers are still kind of elude us, which I'm surprised that still in this day and age, end of 2016 going into 2017, that is still the case. Everyone's too obsessed with writing puts. I don't know, Mike. What do you have to say here for our friend Mr. Trader Chad? And are you like me? Would you like to see more data on this stuff? I mean, especially on the straddle side, I think that would be illuminating to a lot of people out there, particularly every earnings cycle, and everyone just hits us up with questions like this.
Would love to see more data on the straddle. The other thing I'd like to point out to add to what you said, I know this hasn't been very common in recent years, but I remember actually one of the first interviews I ever did on your network, probably about 8 or 9 years ago, we had talked about the straddle in terms of how the scrupulous educators of years past, not going to mention any names, but it rhymes with Boptionetics, would often talk about how you can buy a straddle before the earnings and you can make money if the market goes up, or you can make money if the market goes down. Either way, you're a winner. And so I would be curious to see some type of actual data on that, for the reason that to kind of refute the data and kind of another easier way to explain the full story of that. I would agree that you do have skin in the game, people that are buying straddles or selling straddles. I do think that those people are actually paying with real money to show what they think the stock's going to do for the range of it. And so in terms of that as a comparison to the whisper number, I think that it's one thing if someone believes a number is going to be a certain thing. It's another thing if they're actually putting their money where their mouth is, and the straddle actually does that. Is it a good way of predicting it? We talk about on this show all the time in earnings season, did Facebook beat its straddle? Did Google beat the straddle? And we always look at it during the after hours trading, and then we always come up with a debate of, well, should they trade options after hours? And we always do that almost every earnings season, it seems. But I think that it's definitely a barometer, but it's one way to look at it and one tool to look at, not the full picture.
Mr. Rock Lobster, same thought for you, sir. What do you have to say for our friend, Mr. Trader Chad? He wants to know if straddles are the way to go.
Are straddles the way to go? I do look at the earnings straddles. Normally, I don't sell them. What they are usually is the market's, well, I'll just say the fair assessment for whatever is going on. It's It's not that they're necessarily overpriced or underpriced for the earnings. It's just that's kind of the fair level for what everybody sees. It's the usually at the money straddle is the best collection of information for whatever's gonna happen for the term. So the market is giving you a signal. The question is do you believe what the market is trying to tell you or not? So I've just looked at, and we always mark things, and if you have sold straddles the last year, probably in the top 10 biggest stocks, you end up net losing probably quite a bit of money this year. There was enough surprises, and there wasn't enough huge crushes to make that strategy work. So, it's a very, to me, just earnings and a straddle. All you're doing is taking a coin and flipping it, to be honest. So, even if you have some sort of aggressive management strategy afterward, that might give you a little more excitement. So, as a rule, I prefer to trade the after earnings and not necessarily the pre, although there are some pre-earnings trades that I like a lot, but that's probably for a different piece of mail.
Yeah, I was just looking it up as we were talking. There's a very famous, perhaps infamous example of taking this type of analyst research and trying to add a practical spin on it. It was about a little over 10. Actually, it was 2003, so it was about 13 years ago, actually, which is surprising, longer than I thought. And it was a Defense Department, and they have a lot of research going on all the time, trying to analyze intelligence and trying to predict terrorist acts around the world. And they were not too enthused with the results they were getting, and they saw from looking at a lot of research that the markets do a better job of predicting these kind of things. So they actually launched what became termed in the press as their terrorism futures. They were about to until the public outcry crushed it. But they said research indicates that markets are extremely efficient, effective, and timely aggregators of dispersed and even hidden information. Futures markets have proven themselves to be good at predicting such things, such as election results. They're often better than expert opinions. That's the reason the Defense Department came out there and actually put together a marketplace. They were trying to do exactly what Trader Chad was talking about. Of course, it was kind of a heated topic. It was a couple years after 9/11. It was untouchable, and public killed it because of public outcry. But that was another example of just showing, even in the realm of something as kind of seemingly intangible as intelligence, you put some sort of real-world market force behind it, and the predictive value goes up. So yeah, in general, always bet on the real stuff. But yeah, the actual efficacy of straddles, I would love to have a little bit more hard data to tell you about, Chad. Maybe I'll get on some of our friends who are out there cranking away on different studies and see if I can light a fire under them and get some real numbers for you, Mr. Chad, going forward. That one went longer than I thought, so that's all the time we got for this mail block. Let's keep on rolling into Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, welcome to Around the Block. Like the man said, this is the part of the show where we tell you what we're keeping an eye on, what we're watching for the rest of this week. And we had the big number at the end of last week, and that's kind of what everyone was kind of waiting for, the last iron in the fire or so before the big Fed meeting in a few weeks. So not a heck of a lot on the radar this week that may indeed change that. You got some numbers, you got your consumer sentiment and jobless claims and all that fun stuff. A lot of that's already baked into the pie at this point in terms of what the Fed's going to do. Also looking on the earnings front, not a heck of a lot of big names unless you're waiting and holding out bated breath for, like we mentioned, Lulu before, or perhaps Costco on Wednesday, or a few other names. But aside from that, there really isn't a heck of a lot. Oh, good old Toll Brothers and AutoZone tomorrow. So if you're holding out for those, there you go. Something for you to trade. We missed Thor Industries, our beloved Thor Industries. Unfortunately, we'll have to wait for them for next cycle. But that said, Uncle Mike, anything particularly worthy of note that is catching your eye for the rest of this week, sir?
Just certain numbers and certain underlyings. That's it. I think that the big thing now is the Fed. And then the next question is, are we going to get the Santa Claus rally? Will it come? When will it come? Or did it come? Did the Santa Claus rally come in the form of a post-Thanksgiving or Thanksgiving post-election rally. So nothing but that. I think the only real newsmaker that we have for the rest of the year, quite frankly, is the Fed.
I don't know. I think Santa came. I think his name was Trump, sir. I don't know. Santa's got a lot of work ahead of him to beat Mr. Trump on the rally front. We'll see. Perhaps he's got something in his bag of tricks. You never know. That's Santa. He's a wily one, always full of tricks, and his bag is big. They certainly would be nice, but it'd be interesting to see. Mr. Rocklops, same question for you, sir. Anything catching your eye outside of course, Lululemon and AutoZone this week?
All I know is that the title of the show is Donald Trump Santa Claus? Because that's all that guy would need to hear before he starts tweeting that stuff.
There we go. We'll copy him on that. He'll retweet it to the world, and bam, off to the races, sir.
You want a Santa Claus rally? I already brought you the Santa Claus rally. Just so that made me giggle a little bit. Trump he's driving a little red sleigh with the reindeer. It's kind of funny with the comb over and everything. It'd be cool. Anyway, I'm just visualizing the picture now. What do we have? Yeah, we got the Fed next week. The market is pretty much. This is what I'm waiting for. Get the Fed out of. Get them out. Let's let the economy kind of run. People try to make money, lose money, make money, lose money, and they just kind of keep raising interest rates to keep the dollar stable and, keep people from throwing too much money on stupid assets. So why don't they just do that job instead of micromanaging the economy? And I think we're all going to be better, and that should bring higher stock prices down the road. But what the heck do I know? So anyway, but the Fed's pretty much it. We don't have a lot of earnings left, and and just keeping it. I just keep an eye on just like those, steel stocks, commodities, oils, all that stuff is just there's and then the financials as well. There's a bid for all these. So I haven't seen the financials rally like this. I mean, realistically, since they repeal Glass-Steagall. I know I'm going back, but I'm going to say 1997, just when those things just totally took off. It was crazy. So anyway, it's probably the last time we had that kind of a move. And, after that, I mean, the financials rallied for 8-9 years before the financial crisis. But that's the last time I saw this kind of moves in the financials. Been a while.
All right. That music means we have come to the end of yet another epic sojourn through the world of the option block. Some unusual activity, of course, and a bunch of gold names and some Russian names, as well as our old friend Pandora. Talk some VIX at the top of the show, VIX records, a little bit of invisible yoga pants, some kung fu grip. Get on to some of your questions about straddles, and, of course, the endless debate about, is Trump Santa? Mr. Rocklobster thinks he is. Disagree? Hit him up over there at Option Pit to let him know you are not happy with him. All right, before we go, let's check back in with my cohorts, my partners in crime, see what they have cooking that may interest you. Let's start with you, Mr. Uncle Mike. What is cooking in the land of all things, RCM Wealth Advisors /MISC/futures, as well as going long?
Well, part of the epic sojourn could continue, should you choose to call me. The epic sojourn would be a phone call to me if you have any interest in working with a financial advisor in any way, shape, or form who's not afraid of the word put option or call option for that matter. Give me a call, folks, 312-212-3531, or shoot me an email at mtusa@rcmfs.com.
I really want that to happen. I really want someone to call you up and you answer the phone. They just say, I'm calling for the epic sojourn. That would make my day if I heard that.
If you call and mention epic sojourn, I don't know what I'll do, but I'll figure out some type of discount.
He'll do something for you. There you go. Call up Uncle Mike today.
I'll figure out something.
Call up Uncle Mike today. Maybe you'll get all expenses paid trip out to the capital, the paradise on earth that is St. Charles, Illinois. Call him up and ask for the epic sojourn. He'll know what you're talking about. Good stuff. Hit him up over there at good old RCM Wealth Advisors. And I don't know if you have anything as cool as the epic sojourn, Mr. Rock Lobster, but what is cooking in the land of the pit? And if someone calls you up and asks for an epic sojourn, what are you going to give them?
We are going to give them our Saturday course on interest rates and how interest rate affects stock options this Saturday. We will also be posting my volatility course for January. It'll be a 10-part course teaching you how to trade volatility and the volatility products specifically. I don't even think there's a course like that out there anywhere in the universe. So you'll be seeing that at January 10-part course, and also this Saturday on interest rates. And if you likes it, heck, most people become permanent Option Pit subscribers because they love us. So there you go. Get some learning on.
There you go. Get some learning on, and you too can have an epic sojourn through the world of volatility, or I think they did rates recently. All sorts of fun stuff cooking over there in the land of the pit. Unfortunately, our epic sojourn has come to the end. On behalf of Uncle Mike and the Rock Lobster, and indeed myself, I want to thank all of you out there for downloading, streaming, and subscribing to the show. And of course, for joining us live as well. We like you guys too. And we'll see you next week. Actually, not next week. Next Thursday, right here on the Option Block.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.